Today I have Michael Hom with GRA Capital and GRA Money. I want to start by digging into a little bit about your experience, your history, why you got into the space, and about GRA Capital as well.
Pleasure to see you again, Dominique. So how I got into long time ago, I actually had my own company. I was in the wholesale distribution business, and what I ended up doing instead of going through bank financing, I went through uh, uh, what we call non-depository financing. I actually went to Merrill Lynch and got a line of credit from them, and put the whole package together myself. I had a great experience and then ended up having to do that for several of my own clients who needed money. So basically, I was putting the line together and I really enjoyed that. So
Hmm.
when I sold my company, I immediately, after considering what I was going to do, I went and applied for a job, believe it or not, at GE Capital. So it was kind of funny too because they went ahead and said, "Wow, you own your own company while you're doing this." I said, "I really enjoyed financing." So I then got into equipment financing. Then I expanded and went to asset-based lending. So that's how I got started.
With GRA Capital, you're primarily focused on, that's your primary focus, asset-based lending.
And that was it. I started out with equipment and then went to asset-based lending.
For our owners out there who maybe are not as experienced or just getting started, can you define what asset-based lending is and how they could use it to their advantage?
Well, I mean, everybody has assets in their companies, whether they're accounts receivable, cash flow, or equipment and inventory. So they spend the money for these things there, and what they do, they don't ever leverage them enough to help them on cash flow. For example, you have inventory sitting around $1 million, it's already paid for, you can borrow against that. And you have accounts receivable. That means that, hey, you build your client for services or products, and what happens, you're waiting 30, 30, 45, 60 days, you need the money now. That's where you can get asset-based lending.
When you're working with a business owner and they're seeking this type of financing, what's some of the barriers or the biggest mistakes that you've seen? I'm sure you've seen it all. So, what is kind of like the biggest flag that you see and that people can do to turn it around to stay better prepared?
Well, the first thing is I always recommend you go to your bank first. Go to your bank first and see if they can get it done because the reason why you have a relationship with them there. And then if it doesn't happen, that does not mean that you can't get a loan or a line of credit. It just means that the bank's criteria makes it prohibitive for you to do that. So the biggest mistake is that people stop.
Mm.
They just stop immediately and they go, well, I'm not going to get the financing.
Hmm.
And otherwise, but there's a lot of opportunities that have that get financing. And the best thing about that, I explain to people, you can always go, dialing for dollars or hunt and peck for dollars, basically on the internet and try and find somebody. I find that in most cases, it's best for them to find a good, reputable merchant banker or banker to help them navigate through that there because that banker will have multiple sources.
And so when you're applying online, typically, because there's a lot of bad, lenders out there. So people can get caught in high interest loans and things like that, and further down the road that actually prevents them, right?
That's correct. There are loans that you can do. They're technically called payday loans with interest rate is almost like 40% per year. The problem with those loans is that they're great if it's short term. I
Mm.
mean, borrow and get out, and so on. It is never a long term solution because nobody has those profit margins to do that long period of time. And then what happens? They get into it and they keep doing it, and then eventually it becomes a death spiral. There's
Mhm.
no way to get out of it. The only way to get out of it is bankruptcy, or even worse.
So let me ask this with documents, right? When people are getting prepared to turn that in for underwriting, what is it that ideally they should have already prepped and ready to go? Let's say they're looking for 350,000 or less. What should they have versus somebody that's looking for more than that?
Well, the best thing to do is that if you're trying to borrow $350,000, less than $500,000, and so on, the first thing obviously is get all your bank statements. Okay. Normally, a rule of thumb is have 6 months, but have a year worth of bank statements, a financial statement. And also, if you have tax returns, great. Tax returns. Okay, that gets you started and so on. Simple as that there. And then, even though this is a major driver, is what's your credit score?
Mm-hmm.
That's important there because a lot of people are not corporations, or they're basically sole proprietorship. You need to know what your credit score is.
And even if you're an asset-based lender, are you looking, does that report to your credit score? Does it weigh heavily on the decision for a lender? And even your business credit score, does that matter as well?
Well, I mean, look, if your business has lots of liens on it, that's going to be problematic. But here's the thing about this. When you say asset-based lending, they're looking at the assets of the company. The strength of those assets is what they're willing to borrow against it. Like, for example, the accounts receivable or the paper, how strong is your client? Okay, they'll look at that. The inventory is, can it be, in case of a closure, can it be sold quickly to recover the money? So
Hmm.
that's what they'll focus on there. Now, obviously, a good credit score is important because it shows that you have you handle your obligations. But business is business. Sometimes it gets slow. Sometimes it hurts you. We understand that.
So there's a little bit more flexibility when you're working with some of your clients.
Yes, especially that most of my clients, let's face it, a lot of my clients are not bankable. Otherwise, they wouldn't be talking to us. So what happens there, and we understand that. We understand that altogether there. Anybody that has the perfect score is not coming to us. Every business who's completely profitable is not coming to us. It's those
Mhm.
companies that are struggling a little bit or that they're in a growth mode. That's when they come to us.
Right. And even some of those companies are currently working with banks. They just might not necessarily be able to get additional funding from the bank.
That's correct.
Nice. Okay. Gotcha. Gotcha. And so I do want to ask, what type of companies and industries would you consider, especially nowadays, might have a little bit tougher time seeking financing?
Well, I mean, there's nothing that we really haven't done. We don't. The beauty about being a merchant banker is we have lenders from all different areas and so on that we think we've got everything covered. For example, if a lender, if you're in the tobacco industry or the alcohol business, there are a lot of lenders who don't touch it, but a lot of lenders do. And we have access to that.
Because we're currently working on a couple deals right now. Now I want to ask about the new division, GRA money. So the GRA capital, what's the biggest difference can clients expect between GRA capital and GRA money, which is really referral based, right?
That's correct. The GRA money platform was designed for bank lenders or consultants. What it allows them to do is that, for example, you may have a bank that said, hey, we just don't do anything under $250,000. But what the bank can do then, or the consulting basically is refer you to our site. It allows the people to get money. And it goes the same way too. It allows the lender to basically follow you. So as your company gets bigger and so on, they can go ahead and at one time in the future, so on, hopefully be able to help you.
Moving forward, Michael, what would you say do you expect for businesses, for companies, for industries in terms of what their next move should be and what you see as far as the market?
Well, the question basically is how are you going to find capital for growth? Okay.
Mm.
Is that, again, you try to go to your bank first, start with bank and so on, but and the best thing about that is really focus on your assets. The assets and how you're controlling them. For example, if you have inventory, you know what sells, what doesn't sell. Okay, move the ones that don't sell.
Hmm.
Simple as that. There, basically, because the reason why is that some people will hold on to it. It costs money just to sit in your warehouse. It always costs money. It's cheaper to liquidate that and move on. Simple as that there. Sometimes, well, it's not going to be worth anything, or it isn't worth anything just sitting around the warehouse.
Hmm. Hmm.
The second
Cut you
is
off.
the second thing is also your customer base. Is that the you are not a bank. You are not a bank. Okay, so when your customers are extending credit for you and so on, You can't do that. You really can't do that. Every business has some times where you can help them out from time to time there, but you cannot allow people to use you as a bank.
What do you mean by that? Can you give an example?
For example, XYZ company pays you on Friday and said, hey, and the bill is due in 30 days, and they extend it out to 45 or 60 days. You can do it once, maybe twice and so on, but you
Mm-hmm.
can't keep doing that. What the client doing is using you as a bank. Okay, you can't afford that. So I
So,
always tell people, unfortunately, sometimes it's better not to have the client at all than
mm,
have a client doesn't pay you at all.
so cut your losses with that client essentially before it drags on too long.
Exactly.
Got to know when to let certain things go. I definitely think, yeah, a lot of people hold on, you
They
know?
do. They
Yeah.
do. And that's the thing about that. Look, hopefully the customer rises to ship and maybe they come back, maybe not, but you can't afford it.
hmm hmm And if you're not qualified for a loan right now, essentially, like you're saying, don't give up. Go back, look at your financials,
Talk,
maybe change your mo whatever you got going on as far as your business model or whatnot, but don't give up and don't take out overloading on MCAs or personal loans that'll get you in a debt spiral, essentially.
yes. I mean, the thing about this is that see what's working, what's not. Listen to your consultant where the problems are. It's important there because unfortunately, a lot of people are great salesmen. They know their product. They're not necessarily good businessmen. Okay, so for example, most people don't have an idea what their overhead is. Figure it out.
Mm-hmm. And if you don't know how to figure that out, get with an accountant, get with
A
somebody who can help
concern.
you.
Exactly. Somebody
Yeah.
teaches you, say, hey, yeah, your business is great and so on, but it costs you $10 to open your door and you're only making $8.
Well, thank you, Michael, for joining today and, letting us know a little bit about GRA, capital and GRA money and how businesses can better be prepared moving forward when looking for a loan.
We're welcome very much.